If you've been keeping an eye on the Canadian housing market, you've probably felt the chill lately. All that optimism we saw at the start of the year, it seems to have faded. So today, we're going to dig into the new forecast data and figure out what exactly is going on.
This is the question on everybody's mind, right? Doesn't matter if you're trying to buy your first home or you're a seasoned investor. Recent forecasts are suggesting that the road to buying or selling a house just got a whole lot bumpier.
So what's the real story? Well, experts are calling the beginning of 2026 shaky. It's like the market had all this momentum and then just slammed on the brakes right out of the gate.
And hey, this isn't just a vibe or a feeling. Michael Davenport over at Oxford Economics puts it pretty bluntly. The market is stuck in a rut. I mean, that's a powerful phrase, and it really captures the mood out there right now.
The numbers? Yeah, they're telling the same story. In March, the number of homes sold across the country actually went down by 2.3% compared to this time last year. That is not the spring market bounce anyone was hoping for.
All this sluggish activity has basically forced the Canadian Real Estate Association, CREA, to go back to the drawing board and completely rethink its outlook for the year. So let's take a look at just how much the predictions have shifted.
Okay, just look at this. It's wild. Back in January, CRE was predicting a really healthy 5.1% growth in home sales. Fast forward a few months, and they've slashed that all the way down to just 1%. That is a massive downgrade.
And it's not just the number of sales, the price forecast got a haircut too. They've lowered what they expect the national average home price to be by about $10,000 from what they thought back in January. For anyone out there buying or selling, that's a pretty significant change.
Now, to really put this all in context, you have to zoom out a bit. The national benchmark house price is now down a full 20% from that crazy peak we saw back in early 2022. That's a major, major correction.
So why the big chill? What happened?
Well, it's not really one thing. It's more like a chain reaction, A series of global events that ends up hitting super close to home. We're talking right in your mortgage rate.
This slide here shows that chain reaction perfectly. It all starts with general uncertainty around the world. That leads to a spike in oil prices, which then fuels higher than expected inflation. And what's the final domino to fall? The banks raise their fixed mortgage rates. See, each one just pushes the next.
And this whole economic domino effect has a very real impact on people. What happens is potential homebuyers just hit pause. They're shifting into a wait-and-see mode, holding off on making one of the biggest purchases of their entire lives until they get a clearer idea of where interest rates are actually going. Okay, so with all this uncertainty floating around, where do things go from here? As you can probably guess, the experts have a couple of pretty different ideas about what might happen next. So in one corner, we've got the cautious analyst, Michael Davenport, who we heard from earlier. And in the other corner, we've got a much more hopeful perspective from Phil Soper, who's the CEO of the real estate giant Royal LePage. Davenport's view is, well, it's pretty sober. He's warning there's a material risk that this slump could drag on and maybe even lead to an even deeper correction in prices. His take is that without some stability on the global stage, the housing market is just going to stay vulnerable. But then you have Phil Soper, who sees another possibility. He argues that buyer confidence is a funny thing, and that, really, it doesn't take much to turn the market around. He thinks just a little bit of good news from the geopolitical world could be all it takes for buyers to change their behavior and bring the market roaring back to life.
So, you've got these two competing ideas in mind. What does the official forecast look like when we try to peek even further down the road into 2027?
For now, CREA is calling for a very modest recovery in 2027. We're talking a small improvement in sales and a tiny little bump in the average price. But, and this is a huge but, they point out that these numbers could get revised upwards if this whole inflation shock we're going through turns out to be a short-term thing. So yeah, the future is anything but certain.
And this all boils down to one final, really crucial question. It just shows you how connected our world really is. The price of oil, conflicts happening on the other side of the planet, they're not just abstract headlines anymore.
They are now factors that could directly decide the interest rate on your next mortgage. All of a sudden, geopolitics is personal.